Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within company reports, and boy do we have a story today with Tecnoglass Incorporated's latest filing. It is like peering into a crystal ball, but for business finances. So what is the big picture here? Well, Tecnoglass is showing quite a bit of growth, but also navigating some interesting challenges that could really shape their future. Let's dive in. First off, let's look at the numbers. The company reported total operating revenues of $738,313,000 for the 9 months ending the 30th of September 2025. That is a solid jump from $650,608,000 in the same period. Last year, that is a boost of about 13.5%, pretty impressive. Now, while revenues are up, let's glance at their short-term obligations. Total current liabilities are at $332,618,000 for the 30th of September 2025 compared to $265,826,000 at the end of 2024. This increase suggests they're taking on more short-term obligations, which is not necessarily bad, but it is something to keep an eye on. Let us talk about the profit they are making directly from selling their products. Gross profit for the 9 months ending the 30th of September 2025 hit $323,180,000. That is a hike from $273,470,000 in 2024, an increase of almost 18.2%. The profit margin also improved to 43.8% from 42.0%, showing they are becoming more efficient at turning those sales into actual profit. But here is where some of the challenges start to show. Operating expenses jumped significantly from $113,619,000 for the first 9 months of 2024 to $142,905,000 for the same period in 2025. That is a nearly 26% increase. This is mainly due to new tariffs in the US, a significant chunk of their business, and some administrative costs and higher transportation expenses. Now, this is a pretty big item for the 9 months ending the 30th of September 2025. Tecnoglass recorded a loss on debt extinguishment of $1,354,000. This happened because they refinanced their debt, essentially closing out the old loans and setting up new ones. This is a common move to get better terms, but it often comes with a one-time cost. So after all the revenues, costs, and expenses, the company landed a net income of $133,460,000 for the first 9 months of 2025, up from $114,293,000 in the prior year period. That is a good boost of almost 17%. That means the company is becoming more profitable overall. Let us look at how much cash they generated from simply running their business. Cash flow from operations provided approximately $104.7 million for the first 9 months of 2025. This is a slight decrease from $109.4 million in the same period of 2024, but still a very healthy number. They are investing in the future. Cash flow used in investing activities was $68.0 million for the 9 months ending the 30th of September 2025. This is substantially higher than the $51.5 million used in 2024. This big jump is largely due to their acquisition of Continental Glass Systems in Florida for about $10.4 million plus significant spending on property, plant, and equipment. This shows they are actively expanding their physical assets and market reach. On the financing side, they used $50.6 million in the first 9 months of 2025. This is slightly less than the $63.4 million used in 2024. Most of this activity relates to their debt management, including entering into a new $500 million credit facility. Going into more detail on revenues, their operating revenues grew by 9.3% in the July to September quarter of 2025 compared to the same quarter in 2024, driven by a strong US market, which saw an 8.0% increase. Specifically, the US commercial market boomed up 12.3%, which is great news. Latin America and the Caribbean also saw a significant 37.0% jump in revenues. However, that strong revenue growth came at a cost. The gross profit margin dipped to 42.7% in the third quarter of 2025 compared to 45.8% in the prior year. This is attributed to higher raw material costs, especially for us sourced aluminum, a stronger Colombian peso, and a shift in sales mix towards commercial projects that include installation service, which typically have lower margins. Operating expenses saw a noticeable rise of 13.9% in the third quarter of 2025. This was largely due to tariffs on US imports, though the impact was less severe than in the previous quarter. Additionally, there were increases in selling and administrative costs like transportation and commissions tied to the higher revenue. Tecnoglass experienced a gain of $1.9 million from foreign currency transactions in the third quarter of 2025, a reversal from the $0.9 million gain in the same period of 2024. It seems seems they are managing currency fluctuations a bit better this year. Interestingly, interest expense this period saw a gain of $2.7 million related to derivative financial instruments compared to no such activity in the previous year. This gain is tied to changes in fair value of their interest rate swaps and foreign currency contracts after they discontinued hedge accounting. Due to refinancing their debt, these are generally non-recurring items and do not reflect core business performance. The company reported income tax expense of $20.8 million for the third quarter of 2025. This resulted in an effective tax rate of 30.6%, which is pretty close to their statutory rate. Let's touch on related party transactions. Tecnoglass made substantial charitable contributions to Foundation Tecnoglass, as windows totaling $3.2 million for the 9 months of 2025. This is a significant commitment to social causes. Sales to Prisma. Glass LLC, a distributor also controlled by family members of their co-o, have increased significantly to $1.8 million for the 9 months of 2025, from $0.8 million in the previous year. This shows growing commercial ties with related entities. Their investment in the Vidrio Andino joint venture continues to be a strategic move. While they made purchases of $31.1 million from this venture, their equity method income from it decreased to $2.9 million from $3.7 million. In the prior year, this suggests the venture, while important, is contributing a bit less to their bottom line recently. Now, for the bottom line for shareholders, basic earnings per ordinary share for the 9 months ended the 30th of September 2025 were $2.84, up from $2.43 in the same period last year. Diluted earnings per S-Share also saw a similar increase. Tecnoglass is actively returning capital to shareholders in the first 9 months of 2025. They repurchased 417,302 shares for approximately $30 million. And they recently increased their share repurchase authorization to a significant $150 million. This suggests management is confident in their cash flow and sees their stock as undervalued. A key risk highlighted is the potential for political or economic tensions between Colombia, where they manufacture, and the US, where they sell a lot of their products. Specifically, they mentioned potential impacts from political differences between the US and Colombian administrations. Any trade restrictions, tariffs, or payment issues could seriously hurt their business. This is a real concern given their dependence on both. Countries now looking at these numbers more broadly. Tecnoglass appears to be a company in growth mode with strong revenue increases and improved profitability from operations, their investments in capacity, and strategic acquisitions, like Continental Glass Systems, show a clear intent to expand their US market share. However, the compressed gross margins due to RAD-W material costs and currency fluctuations are a concern. They are navigating these challenges well by passing some costs through with price adjustments, and by managing their costs more efficiently. The debt refinancing and associated loss on extinguishment is a one-time event that should lead to better financing terms in the long run. The significant share buybacks also signed management's confidence in the company's future prospects. However, the risk associated with geopolitical tensions between Colombia and the US bears watching closely. It could present a significant headwind if relations sour further. Overall, Tecnoglass is a company with a solid growth trajectory and a clear strategy for expanding its US presence. But it needs to continue to manage its costs and mitigate potential geopolitical risks to sustain its profitability. Alright, that is our breakdown of Tecnoglass Inc. Its latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more. You can also join our Discord community linked in the description below for more in-depth discussions. Thanks for watching. See you next time.